Good afternoon. It has been quite a wild week since the last we got together last Thursday. We have seen a market basically on a complete roller coaster, down 9%, back up 8%, back down a couple percent. So it's just been a wild ride. And we're going to look today to see how that, as well as news on the consumer price index and the jobs report, along with what's happening with the tariffs, is going to affect the housing market. Hello, I'm Brendan Rendo with the Homes in Orlando team, and this is the Orlando Real Estate Buzz. So let's hop right into it. Consumer price index came out this morning and it was actually fantastic news. Um, for the first time since 2020, prices actually dropped a little bit, only 0.1%, but it was an actual drop. And that should have, I thought, rallied the market a little bit more than it did, should have helped with the bond market a little bit. But I think everyone's still skeptical because you hear a lot of the fear mongers out there. Well, that was great, but with the tariffs, we're going to end up with higher inflation again. And that's really been the mantra of a lot of the anti-tariff uh, groups out there, is that, hey, tariffs are going to cause greater inflation, for all consumers on all ends. I'm not buying it completely because if you look into the commodities market and where the commodities are sitting currently, you'll see that a lot of the commodities are also down since since the announcement of the tariffs. So, but when you look at it, the big thing that was really driving all of the information was actually energy. Energy prices came down quite a bit. So when we look at it, energy overall was down 3.3%, with energy commodities down 9.5, gasoline down a negative 9.8. And I think we're going to continue to see this. Oil, the price of oil, since the beginning of the tariff debate last week, had dropped, I believe at one point, close to $16 a barrel. To come back a little bit, but not a whole heck of a lot. So we were actually seeing oil under $60 a barrel. And of course, everything else on this list can't get to you without oil, without fuel. So as long as fuel can continue to come down or stay down, I think it's going to continue to put the downward pressure on inflation. Then the other big data that came out today, that a lot of people, because of the government layoffs, felt that this number may pop up a little bit more than what we thought, was the jobs numbers. And we actually held pretty steady at 223,000, only 4,000 more than last week. And I think this is one area, and Powell actually came out and talked about it a little bit last Friday, that he wasn't going to move, and they're not going to move on Fed's overnight rate at all. And I don't, I think a lot of people, when the tariffs first came out, the market crashed, everything like that. You actually saw Trump come out and say, oh, this would be a great time for the Fed to um, adjust their rates, cut their rates. But Powell didn't move. So you had a little bit of a fight going on between the Fed and the Treasury. And I think the Treasury actually kind of blinked first. I think that's one reason why you saw the 90-day reprieve. Because one thing that happened that really put a damper on everything was our 10-year Treasury went from sitting down here at a low of around 3.9, actually dropped under 4 for a change. Great for a couple of my clients because they actually took advantage, listened to their lender, and locked in their rates. Not so good for the people who waited till Monday, um, because the market went in the total opposite direction. So what happens, and this number of different reasons why people feel this may have happened is, but we went and did a complete reversal and jumped up to almost close to 4.5%, 4.49 ended up being the high over the past couple of days on the 10-year treasury. And of course, we all know, from talking multiple times, the 10-year treasury is one of the key cornerstones for figuring out interest rates. So we saw that take an absolute jump. Reason for that, a lot of people had different perspectives. Some felt that it was China, quote, possibly selling off treasuries. They did sell off some, but they didn't sell off a whole heck of a lot. They sold off about, I believe it was around 50 billion. The big one that I've heard that I kind of key to was the Japanese, because this peak was at the start of the Japanese stock market that evening. Could have been a lot of people getting out of bonds to cover their margins. So that kind of looks like it. And since then, we have done a little bit of a reprieve, not a whole lot yet, but we're back down to 4.378. And I think right before we were sitting more around the I think it was about 4.29, 4.28. So we're still a little bit higher from when the battle with the tariffs started. So we've seen mortgage rates after 2 or 3 days of being very aggressive. I had a client who actually went from from 7% down to 6.5% on their interest rate. So worked out fantastic for them. Allowed us to completely change their structure of their loan because of that half a point discount. So that's really made a huge difference for a lot of people. And where this is headed, just kind of like everybody out there, not real sure where it's going to go, especially with Trump now concentrating on the Chinese. I understand, looking at several different charts, reading several different articles, with the Chinese. I understand why he's done a good job of isolating them. One of the things that he said is that, of course, 75 countries have come out, and this was actually a release just earlier today from the Treasury Secretary. And he actually is going to be having, I don't know if you remember this, a meeting with the Prime Minister of Vietnam to discuss the tariffs and changing the trade balance. If you go back to when Trump was showing the charts, Vietnam had one of the highest tariffs. So they've immediately come right back to the table. Why is that important? Because a lot of the production from China moved to Vietnam in order for China to kind of work around the tariffs. And that's an interesting story, and that's something that I think with this whole thing we've got to be extremely careful of, because a lot of people are asking me, well, how does this affect the housing market? What costs, what things are we going to see in the housing market that may affect it? And this goes back actually a couple of years that I wanted to bring up, and it concerned the U.S. quartz manufacturers. If you've been into a lot of new construction homes, seen a lot of remodeling projects, you'll notice that a lot of people have gotten away from the granite anymore. It's not. It used to be granite. It used to be the top of the line. Then you had, Formica, laminates, those other things. Corian, which I absolutely hate. Oh, ugliest stuff in the world. But then you started to see quartz. Quartz was quite honestly, less expensive than granite until it started getting more popular. And one of the things that you see, and this is, I think, is an excellent example of the effects of tariffs, what people do to try to get around tariffs. And the whole point was is that back in 2018, American quartz manufacturers filed an unfair trade complaint against the Chinese, because the Chinese through government subsidies, and this is what they do with everything. This is, I mean, they manipulate their currency. They provide quote government subsidies to products, and this is probably one of the best examples that you're going to see of exactly how they play the game and why it's so important to stand up to them. In this case, they were dumping Chinese manufactured quartz on the U.S. market for less than what they were actually able to produce it for. So the quartz producers in the United States, filed a complaint. They came out. They actually put into place tariffs to help level the playing field, and that's again the greatest use of tariffs is to help level the playing field. So this helped level the playing field for Chinese to American. And what you saw, again, just like we've seen recently, is we saw companies, okay, great, wonderful. We're now going to start investing in the United States. You had some companies from Spain, South America, Israel, quartz producers say, okay, wonderful. Now that's a level playing field. I can afford to set up manufacturing here in the United States. And so they did. Well, what did China do to get around the tariff program? They went to India. So they actually moved their manufacturing over to India, which didn't have the tariff, same manufacturers, same players, and then started importing through India. And we ran into the same problem in that the stuff coming in from India, which is actually Chinese backed, was being dumped for less than the actual production. So what do the quartz manufacturers here in America have to do again? They had to go back and they had to lobby the government, which took a tremendous amount of time. And this is one thing I don't get. What's particularly disturbing is that much of this dumping is coming from the same producers originally targeted by the Commerce Department. So they knew it. And in order to evade U.S. tariffs, overseas quartz producers simply moved their factories and equipment from China to India. And then this is 2022. Earlier this year, the Commerce Department investigated an Indian quartz manufacturer suspected of selling product at below fair market value. And what did they do? They just kept giving them waivers. So instead of jumping on it right away to protect the American producers, they just sat on it. And finally, they came back and they put the tariffs on it, again, leveling the playing field. So this to me is one of the best examples of tariffs, how they're used, why they're necessary, and there's no reason to sit there and yell and scream about all this stuff. It's a fact of industry. It's a way that we actually have to level the playing field for our manufacturers here. So if you're wondering, there's a perfect example of why tariffs are important. And yes, okay, well, the builders will save a few dollars, but you're also putting people in America, taking American jobs and destroying them by not protecting them. So it's the same argument everyone else is having is, well, it's cheap product and Americans won't do the jobs. Well, yeah, the Americans will do the jobs, but you got to give us a level playing field. And you can't allow the Chinese to manipulate their currency and also provide, quote, subsidies to those manufacturers. So those are the things. That's something I just want to go over. So you actually had an example of how it works, why they're important, and it's just a great. To me, it's just a great example of what we're trying to do in leveling the playing field with tariffs. So going from there, we're going to look at real quick what's going on in the Orlando market. And Aura, all of a sudden, this is interesting, has stopped producing the weekly numbers report. They haven't done one since mid-March. So kind of had to finagle a little bit to get some numbers. And this is just basically over the past 30 days of what's going on here in Orlando. What do I think we'll see? Um, we until the fear of the tariffs, I think, gets settled off. Um, we went from having a really steady up increase in housing sales to a lot of people. I know we had one here recently where the buyer on one of my listings decided to back out because he was just quote unsure. And where he was unsure was where interest rates going to go because he hadn't locked in. So he watched going from possibly a 6.5% interest rate to a 7% interest rate. And all of a sudden, that cost of the mortgage just made him uncomfortable. So where we thought we had structured a deal that made everybody happy, he actually walked away on Monday because the interest rates turned around and did a huge jump back up. So I think we're seeing consistent sales, but I think we're going to see a couple weeks of dips simply because of what's going on with the tariffs, with the market. Everyone's just jittery. It's a game we're going to have to finish playing out. So, anyways, for Orange, Osceola, Seminole, and Volusia County, which I considered Central Florida, we had 228,000 sales in the past 30 days. That's down about 19%, which really goes back, I think, more to early February, where we really in March, where it was kind of dead, completely dead. The good news is pending sales were up nearly 2% to 3,445. Our active listings are actually kind of holding steady at roughly 13,500. Our months of inventory, this is increasing again. The buyers, they've got more choices. If we can see a pullback again in the interest rates, I think you're going to see a lot of them start to come out. We're getting very close to the end of school too. A lot of people like to start shopping before then. And then our average days on market, 73. This has gone back up again. So, and this very well, it could be from what's going on with the market overall, just not making people real comfortable. And then sales price to list price ratio, we're holding pretty steady at 95%, which is pretty good. So you can negotiate down a little bit. Plus, if you're looking for help with the closing costs, conventional loans, generally it's you can get 3%. FHA, you can get 3 to 4%. So it gives you a nice bit of room to negotiate, have a little less money out of your pocket. So the market's steady. It's still holding. I'm just going to be curious to see how the numbers, because everything's kind of a 30-day window, how the numbers at the end of April look after the first couple of weeks here, where things went kind of crazy. To all you who locked in last Thursday or Friday, congratulations. You guys did wonderful. You're saving yourself anywhere from 3/8 to 0.5% on your interest rate. Take advantage of it. Get out there, find a nice home. Well, I just wanted to thank you all for joining us today here at the Orlando Real Estate Buzz. It is always a pleasure. And we look forward to seeing you again next week and keeping you up to date that everything that's going on in the economy that will affect home sales, not only here, but nationally. Take care. Remember to like, subscribe, and join us again next Thursday. Bye-bye.